All right, joining me now for a closer look at the Disney brand and its performance last quarter is Andi Stein. She's a professor and graduate program coordinator at California State University's Fullerton's Department of Communications and the author of Why We Love Disney, The Power of the Disney Brand. Andi, thanks for joining us.
Oh, thank you very much. I'm very happy to be here.
So Disney reporting earnings per share of $1.62. That was up 4.6% from the year-ago quarter. Revenue totaling $14.3 billion, just beating expectations. Overall, what's your take?
No, I think this is good. I think people were expecting it to be a little lower, and so I think this is a good thing for the company and for investors overall.
Well, Disney's weak area has been cable TV. That division has taken a knock. Sales were down 2% previous quarter. This quarter, it was up 1%, mostly thanks to higher ad revenue from ESPN. But you still have serious declines at the Disney Channel and ABC, and investors are concerned about this. Should they be concerned? Is this just part of the cable cutting phenomenon, and is it just inevitable that the landscape is changing?
I think it's a combination of things. The landscape is changing, and a big concern is about younger viewers who are no longer subscribing to cable services and are streaming. And so it makes sense to start thinking of what are the alternatives that are going to capture this demographic.
To capitalize on the streaming demographic, you're seeing Disney take some proactive steps, announcing that it bought a stake in Bamtech for $1 billion. That's going to become a key partner for Disney in support and delivery of video content. What's your take on that move?
I think that's a great plan. Sports is one of the largest reasons that people subscribe to cable. And if people want an alternative, this is a good way to offer a service that will let them continue to watch sports without necessarily having to subscribe to cable services.
Well, tough to see how to monetize on that, but let's focus on theme parks because revenue there increased 6%. And operating income also rose to $994 million. Now, is this a surprise given that we had that terrorist attack in an Orlando nightclub? There was that incident with the alligator attack killing a child. Were you surprised that the theme parks still did well?
I was. I think people were holding their breath on the theme parks because of all the things that happened at the same time in Orlando and because of the concerns about the costs of opening Shanghai Disneyland. But I think the positive reaction so far to Shanghai Disneyland has had an impact on this and will continue to help the theme park revenues as more and more people come to that park.
Well, let's talk about Shanghai Disney, the resort opening up in June. What's been the attendance like so far?
Well, I have to say I was actually at opening day of Shanghai Disneyland. I was there for the first 3 days, and it was booming those first opening days. I was able to talk with people who had come from all over the world for the opening, and so I know it's only been not even 2 months since the park opened, and so attendance has slacked off a little bit now that the novelty has worn off. But I think as the word gets out and people, especially locals, become aware of what the park has to offer, there will be more increase in overall visitation.
Well, you know, Andi, you put in Shanghai Disney in a Google search, in social media searches, and the things that come up are complaints, reports of long lines, and that rides and attractions are not always working. What kind of reviews is Shanghai Disney getting from your perspective, and how can it work on that?
I know that especially when they were doing the pre-testing of Shanghai Disney, there were some problems with testing things out. And when I was there, some of the lines were 4 hours long to get into some of the attractions. And I know many people are not going to be willing to wait that long in the lines. And so I think part of opening a new park is figuring out what you have to adjust as you go. And it probably will take 6 months at least to work out some of the bugs and figure out how they can smooth over the process that will make it the optimal guest experience.
Right. Well, still the happiest place on earth. Thanks so much, Andi Stein, Professor and Graduate Program Coordinator at California State University's Fullerton's Department of Communications, and the author of Why We Love Disney, The Power of the Disney Brand.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.